Here's a quick video regarding the positions that we had expire. As you guys know, I think it was Monday, we closed out a lot of positions early, which was actually pretty fortuitous because the market was down every single day this week. I believe that's the case. You had positions like Amazon, which were down around 6.5% this week. Relatively speaking, we had a very good trading week. We only made one mistake, which was selling that 1540 put on Amazon on Wednesday. We were very patient and very disciplined. Now, we made a mistake by selling that 1540 put. That position probably still has around an 80% probability of profit, and it'll expire this upcoming Friday. But at the same time, when you sell a position for $4, and at one time you can collect like $18 for that, or maybe even $20. I don't remember exactly, but I think at one point yesterday you could probably collect around $20 for that position. Then it becomes it's just you left a lot of money on the table, and obviously I did as well. Or maybe we sold it for like $2, and then it was trading at $20. But the point is that irrespective of how a trade works out, you can make money on bad trades, and you can lose money on good trades. And selling that and opening that position on Wednesday on Amazon was not a good trade because we left a lot of money on the table, and I wasn't patient enough. Now, we were patient on Monday and Tuesday, but we should have been more patient. Now, that's not to say that there wasn't there definitely could have been a situation where we sold that put on Amazon at 1540, and then the remainder of the day Amazon rallied, and it rallied back up to the high 1600. So you have no way of knowing. You don't want to beat yourself up for not being able to tell the future, because nobody can. And you also don't want to judge yourself too harshly based upon factors that are outside your control. However, on Wednesday, when the market was showing substantial weakness, I do believe that we should have been more patient and waited. I think we ended up selling and opening that position in Amazon when it was down around 20, and then it ended up being down around 45. In any case, so we had a few positions, but besides that one trade, and again, I don't want to harp on the negative, we had a very good week, especially considering that the market was down around like 5 days in a row. I believe that's the case. So we had these calls from TTWO expire. This wasn't a huge money maker. I think we sold it for around 26 cents or something, so we made around $100 and something. DG, we no longer have a DG position. Remember, this DG position, we were short calls. We were short calls all the way from 110, and DG slowly and methodically increased in price all the way up to around $119, $120. When a stock becomes in the money, but it hovers around the at the money strike price, it's no problem. It's very easy for us to manage and roll that position. So even many of you with the UNH position, if you're short puts at like 240, that's no problem. The only problem will be if UNH falls to around 215 or 220, in which case you're going to have a little bit of a problem, and I will as well, because you're going to have to wait for it to increase in price so that it gets closer to the strike price, so that way it's easier to manage. But if a call position is like $1 or $2 in the money, or if you have a put position like UNH that you're short the 240 and it's trading at around 237, it's not a problem. It's very easy to roll and manage and to reduce the size and to improve basis. As far as this upcoming week, now again, I don't tell the future and I can't forecast. However, I definitely think it was an encouraging sign that the market was down five straight days, and the market fell relatively. It fell a lot last week. I think at one point it was down around 2.5%, 3%, and because the market was definitely overbought. Remember, on Monday and Tuesday, the reason why we didn't make any trades is because despite the market being down, it was so overbought that we just simply didn't see any good entry points for us to make trades. We were patient on Monday and Tuesday. So I think that the market had the ability this past week to correct a little bit is a good sign going forward. The fact that volatility didn't spike up that tremendously is also a good sign, because there isn't a tremendous amount of uncertainty. We were able to get rid of and consolidate some of our existing TTWO positions. I think that right now, I wouldn't say that the Amazon position at 1565 put is bad at all. It's just something to keep in mind. I do want to get rid of the UNH position, which we have some contracts that are expiring this week. Additionally, I do want to get rid of the TTWO. I was able to consolidate that position, as I mentioned earlier. I took I think it was 2 contracts with the expiration of last Friday that had a strike price of 90, and then 8 contracts that had a strike price of 88. And I was able to consolidate both of those positions into 9 total contracts with a strike of 87. So as I said earlier, as long as an underlying stock trades and hovers around the strike price, it's going to be no problem. So my goal this week is to continue to be patient, to get rid of the TTWO, or to, at a minimum, reduce that size. I want to also reduce the UNH position, and hopefully UNH cooperates and it increases in price above 240. And then I want to continue being patient and making good strategic trades. There was an opportunity yesterday to open up a position in Google. I remember when Google fell to the low 1100s, I thought that would have been a really good opportunity to acquire and obtain a lot of premium by selling a 1050 put. I didn't pull the trigger, mostly because that was the 5th consecutive day that the market was down, and at one point the S&P was down around 25 or 26 points, and I just felt that it would be better to wait and to show diligence and patience, just in case the S&P decided to fall 50 points. Instead, it didn't fall 50 points. Instead, it rallied into the close, and it was only down 5 points. But you don't know that at the time. But definitely, Google was a really good opportunity yesterday when it fell to the low 1100s to sell like a 1050 put and collect a substantial amount of premium. And remember, I think the big takeaway from this is it's always better to be patient and to enter A opportunities. And when you do have an A opportunity, you should bet larger than normal. And the reason is that you're able to collect substantially more premium. So if you guys had sold, and if we had sold when Amazon fell below 1600 yesterday, I think it hit a low of like 1586. Now I don't expect anyone to be able to call the bottom, but let's say after it fell below 1600, let's say like 1595, you were able to sell a like 1500 put, you would have been able to collect around $12 or $13. And if you had sold 5 contracts at $1,300 per contract, you could have easily made around $6,500. That's a lot of money, and that's not a tremendous amount of risk, because in that situation, Amazon had fallen 5 straight days, and it would have been an A trade. So that would have been an easy way for you to collect a lot of money by saving your buying power. Because remember, once you commit, then you can't then open up a new trade, because the way that it works is the marketplace, the amount of premium that you receive is always changing all the time. And once you commit capital, then you lock yourself in. And then once you sell and you open a new position, at that moment that you commit, your goal is that you want the market to suddenly turn around and move in the opposite direction, right? So if Amazon was falling yesterday, and at one point it was trading at 1586, let's say you got in at 1590, which would be an amazing entry, by the way. At that moment that you commit, you immediately want Amazon to reverse course and trade up above 1600. And the reason why I'm saying this is that once you commit and the market goes the other way, instead of it trading down to 1590, let's say it fell all the way down to 1550, because you want to make sure that you always keep a large amount of buying power in reserve, you can't make another trade. So once you commit, you're locked in, and you want the market to reverse course. You just don't know when the market is going to reverse course. As a result, it's always better to be patient, because if you commit too early and you think that the market's going to turn around when Amazon is trading at 1590 and then it trades all the way down to 1550, if you sold the 1590 and you collected $12 in premium, if Amazon fell down to 1550, you would collect $16 in premium. That's 33% more premium, and that's how we get paid. So remember, patience is a virtue. Patience is one of the most important things, and yesterday was a great example of how patience pays off. So I do think that this week there's going to be a little bit of a retracement from the losses that we experienced this past week. We had a very good trading week, except for that one trade that we made on Wednesday. And this is how we make money in the stock market. We opened up a lot of positions. We did very well. I hope that and also remember, UNH showed a lot of strength this past week, a lot. The market was down 5 straight days, and UNH held its own. So I wouldn't really worry too much about that position from what I've seen this past week. And TTWO, same thing. My goal this next week is to reduce and potentially get rid of some of the TTWO get rid of the UNH position or reduce some of that position, and also be very patient and make good trades so that strategically we build up our account without having or experiencing too much stress, and also without having a substantial amount of variability and volatility based upon what the market does.